myself Vaibhav. In today's session of Visual JForex, we will talk about the moving average of a new type. We have been seeing the various moving averages for past couple of sessions, and in today's session, it's the turn of the triangular moving average, the TRIMA. We will see its functions, and then we will plot it on the chart and also on the Visual JForex board to see how we can use this to build an automated setup on the Visual JForex platform to run it on our live or even demo accounts and see if it can perform the job for us while we are even away from the system, away from the screen, and it should be trading profitably for us. So let's get started. TRIMA, TRIMA. From this short description, you can make out that this is the moving average, which is the average of the average. As if you were to see its calculation, we have to take the sum of the SMAs for a given time period. So what we do is we take out individual SMAs for each time period, and then we do the sum of that and divide it by the number of periods. So then we get this triangular moving average. If you want to go into the details of how it is being calculated, you will have to just do some short search, and there you will get the calculation details as well. Now for us, that calculation will be done by the automated setup on the system. So we are not really going into the how it is calculated. We don't need to do that job manually. For us, this platform, the Visual JForex platform developed by the Dukascopy Bank SA, will do the job. So all we have to do is take out this particular indicator and see how it performs for the given time period, and then we can customize it. We can use this to build an automated setup. So this is the indicator block. You have to choose the start point, and as you might already be aware, any of these three or all of the three can be chosen as the start point for our algorithm. And here you can see the brief description as well. The triangular moving average is similar to other moving averages in that it shows the price over a specified number of time, the data points. And one thing is there that there is a lag given that it is based on SMAs. So you have to see how you can adapt this indicator to your needs, and you have to plot it in such a way that you will get most of the profitable trades. And for that you will need to do the testing to see if any particular setup has been profitable in the past. Of course the past is not going to repeat, but you will get a good idea whether the system is likely to be of statistical significance. So in that manner you will have some clarity on your setup. Now here we have to define this default instrument. For today's session we will use a different instrument, and let us go with another euro pair, or this time we use GBP. GBP is a lot more volatile compared to euro USD. So here we plot it on the chart, and pardon me, and let us change the default instrument, the charting instrument as well. To add this particular instrument to the chart, you have to simply do the quick search, and here it comes, the TRIMA. From the chart you can see that it is a lot smoother than a simple SMA. These curves are a lot smoother compared to the SMA, and because of this additional smoothing, the lag is also there. As you can observe, the price change happens really quickly, and then after some time the TRIMA changes course, so that lag is there, and we have to incorporate this lag. Of course, there is no better or worse indicator. It all depends on how we use any particular indicator, and for that we have to define the parameters in such a way after due observation and enough of testing, so that you see what is good and what is not. And this instrument, this indicator, can be used to act as a guiding light for the detection of the trend. Whenever we see that these TRIMA values are on the rise compared to the prior time period, we can make out that the momentum is on the bullish side. Whenever the TRIMA values are falling, we can sense that the momentum is falling, is in the bearish territory. And also we can use the change of course whenever the price action crosses from one side to another. That can also be taken as a consideration or possibility of the change in course for the underlying instrument. Also we can use multiple TRIMA indicators on different time periods. Suppose this is 30. If we were to add a new TRIMA here, and with a different, now 30 double, so we need to edit it. Let us take 50 as the value for second TRIMA indicator. You can observe that we have these crossovers happening in different time of point in time, and this crossover setup can also be used. So there are multiple ways in which you can utilize this TRIMA indicator to act as a guiding light for your setup, and to see which is likely to be more profitable. You will have to do the experimentation and then observation, and also run the historical data testing after you have developed this on the Visual JForex platform to figure out what is likely the optimum setup. Now, as is the requirement, we have to customize the block, the indicator block of TRIMA, and here you have this choice starting from 10 seconds to almost a month, and in between you can choose these different options given to you. For example, let us choose 15 minutes as our time period of choice for today's setup. Then this shift value is the look back period. So here, if you are going to take into account the current value or some time back, then you have to choose this shift value accordingly. If you want the output value 1 hour back, then now that this candle period is of 15 minutes, you will have to take shift as 4, and we will be going back in time by 1 hour. So that way you can use these indicators input parameters. You have to define, you have to customize these values. Let us go for the 4, and time period, this is on which the TRIMA values will be calculated. So this is of 30, this is of 50. The longer time period TRIMA indicator will have more smoother curves, and it will also change the direction, change the course less often, as more time will be needed before the TRIMA values on the longer time frame will change, and because of that we can observe these deviation here, that whenever the price action changes course, first the 30 TRIMA will follow, and then later on the 50 TRIMA will follow. And of course, as I said earlier also, that this is a lagging indicator. So the price action will lead, and the indicator output value will follow. But when you want to filter out the noise, and when you want to gauge the underlying instrument's trend, this is a useful indicator. And whenever the values are trending, you will get fairly good indication on which side the trend is. But sometimes when the price action is kind of sideways and in a consolidation phase, in such instances you can have these confusing signals being generated. So you have to watch out, and you have to use this indicator in conjunction with other indicators as well, or use such a setup where you will be able to minimize the noise and kind of stay out of instances where you see the sideways price action taking place and lack of clear trend. But it's easier said than done. That's why it's so hard to design and define profitable setup. But that's our job, and we have to do the experimentation to see what works and what doesn't. Now, if we choose this time period to 50, we will have different output value. The 50 TRIMA will now be reflected here in this output value. And if you want to do the comparison, all you have to do is bring another TRIMA block and then define its parameters, and you will be able to see where the particular TRIMA is headed. You can do the comparison, or you can use this for calculation. You can use it in multiple ways, and in what ways you want to use this particular instrument block, the indicator block, is of course always up to you. You have to define, and whenever you are doing the comparison, you have to keep these parameters like this time period of similar type, similar value, because if you use different time periods, then you will be comparing apple and oranges, and that shouldn't be the case. And that's why the time period for any indicator should be the same whenever you are going to do the comparison. And shift values, the look back period can differ, that is reasonable, and also these the calculation on how much time it is being done can also be different. Then you get these output values, and output values are defined by the settings on which side we are putting the input values and what are the input values goes on to define the output values. So here the offer side can be bid or ask, and because of spread there will be minus difference between these output values. And I would suggest, just as with the case of period, here also you have to use the offer side uh, the same for different indicator blocks if you want to compare two values with one another. And the applied price, closing price, is the default setting, but you can use different applied prices for the calculation of this indicator. And all you have to do is go into this edit part, edit section, and here you can do the experimentation to see which price works better for you. Here I will explain to you the changes which happen simply because we change the applied price. Whenever we want to edit it, we can use a different applied price. So here observe these, please observe these output values for this TRIMA indicator. As soon as I change the value, okay, so this 30 SMA is going lower as soon as I change the applied price to the low price. And if I use high price, it will go up. Now it is gone up, and it is even above this 50 TRIMA value. So all these applied prices are of different types, and which applied price you want to choose is of course your choice. And I would say that it should be determined after observing and after seeing what is the optimum setup for any particular instrument and how it will serve your purpose. So that's how you design these parameters, and then see how the setup is functioning. So that's it from my side for today's session, and I hope you will be able to use TRIMA in this setup of Visual JForex platform and design and develop new algorithms which will prove profitable to you. We will be back tomorrow with another indicator of the moving average series. Till then, have a fabulous time ahead. See you tomorrow. Goodbye.